All right, let's talk about one of the wildest stories on the market right now. A company called IREN Limited. Seriously, this company has gone from mining Bitcoin to striking massive deals with the biggest names in tech. It is a story of just incredible ambition, unbelievable growth, and, as we'll see, some monumental risk. Okay, just look at this chart. This tells you everything you need to know about the drama surrounding IREN. On one hand, you've got this staggering 188% gain over the last year. I mean, wow. But then, on the other hand, a sudden, sharp 13% drop in after-hours trading right after their latest earnings report. And that right there, that's the roller coaster. It's a total battleground between massive optimism and some very serious skepticism. So this really boils down to one massive question, doesn't it? Are we watching the birth of a key player in the AI revolution, a true tech giant? Or is this company's crazy expansion just fueled by so much debt that it's all going to come crashing down? Let's break it down, and we'll start with the optimistic side of things, the bull case. Right, so the argument for IREN is really about one thing: spectacular, almost unbelievable growth. They are making a huge bet on the future of AI, and believe me, they are not holding anything back. So who exactly is IREN? Well, at their core, they're builders. They develop their own sites, engineer their own infrastructure, and run their own data centers. They started out in Bitcoin mining, but now they are pivoting, and pivoting hard, into providing the raw computing power that the AI world is absolutely desperate for. The key here is they control the whole shebang, from the power substation all the way to the individual GPU. In this slide, this really shows you the sheer scale of their ambition. They're in what you could call a massive GPU land grab. Right now, they've got about 23,000 high-performance GPUs. The plan? Scale that to a jaw-dropping 140,000 by the end of 2026. But here's the craziest part. That massive expansion will only use 16% of the total power capacity they've already locked down. I mean, just think about that. They have so much room to grow even beyond this. Okay, so let's ground this in some real numbers. As of early 2025, their first batch of AI GPUs is already pulling in revenue at a rate of about $28 million a year. You know, a solid start. But that's just the appetizer. Once they get that full fleet of 140,000 GPUs up and running, their target for yearly revenue just skyrockets to an astronomical $3.4 billion. It's an audacious leap, to say the least. And you can feel the confidence coming from the top. The company's co-CEO, Daniel Roberts, is talking about accelerating demand and how they're getting ready for thousands of the absolute latest NVIDIA Blackwell GPUs. They truly believe the market needs what they're building, and they're in an all-out race to build it. Now, this all sounds pretty good in theory, right? But the bulls, they have a trump card. There's this one single deal that seems to validate this entire massive strategy: their new partnership with Microsoft. $9.7 billion. Just let that sink in. This is the total value of their new contract with Microsoft, a number so huge it completely changes the entire conversation around this company. And when you dig into the details, it gets even more interesting. It's a 5-year deal expected to bring in almost $2 billion a year in revenue. And check out that profitability, an incredible 85% projected EBITDA margin. But here's the real kicker, that 20% prepayment. Microsoft is paying for a massive chunk of this up front, which is absolutely crucial for helping IREN fund this whole thing. The money is obviously huge, but the strategic value here is just as important. For behemoths like Microsoft, partnering with a nimble, integrated player like IREN lets them get their hands on massive AI capacity way faster than building it all themselves. This deal really puts IREN on the map as a go-to partner in the AI arms race. But, as you know, every rocket ride comes with risks. And that brings us to the other side of the coin. The bear case is actually pretty simple and pretty powerful. Building an AI empire costs an absolute fortune, and IREN is burning through cash at no alarming rate to make it happen. This slide lays out the problem perfectly. In their last reported quarter, IREN brought in a healthy $142 million from its operations. That's the good news. The bad news? It spent $280 million on investing, building data centers and paying for GPUs. They are spending way, way more than they're making. And that spending? Oh, it's about to go into overdrive. Just to buy the GPUs for that big Microsoft deal, NIA needs to come up with $5.8 billion. For a company of this size, that is a truly staggering amount of money. So,
Where's it all going to come from? Well, here's the game plan. That prepayment from Microsoft definitely helps, but they're still looking to raise another $2.5 billion in secured financing, which is basically debt borrowed against the new GPUs. And the rest? That has to come from other places. Cash they have, selling more stock, issuing more notes. It's a strategy that relies heavily on outside funding and a whole lot of debt.
And this kind of spending and debt hasn't gone unnoticed. You can be sure of that. For example, the influential Zacks Investment Research, which does quantitative stock analysis, currently rates IREN as a strong sell. That is literally their lowest possible rating, a major red flag for some. And their recent performance has only fueled those concerns. In the last quarter, the market was expecting IREN to earn about 14 cents per share. What they actually reported was a loss of 34 cents per share. That was a huge miss, and it's what triggered that big stock drop we saw at the very beginning.
Finally, we have to remember they aren't doing this in a vacuum. Competitors like CleanSpark and Applied Digital are also pouring billions into AI infrastructure. Applied Digital, for instance, has a massive $11 billion contract with CoreWeave. This is a brutally competitive and incredibly expensive game to be in.
So where does all this leave us? We've got two incredibly compelling and yet totally opposite stories. One is about explosive growth, the other about extreme financial risk. For IREN, the future is truly unwritten. So let's just boil it all down one last time. The bull case, it all hangs on that game-changing Microsoft deal, those huge revenue targets, and their powerful vertically integrated model. And the bear case, it points right at the massive cash burn, the heavy reliance on debt, the fierce competition, and that worrying strong sell rating.
So, if you're watching the story unfold, what are the key things to look out for? First and foremost, can they actually execute and deliver for Microsoft on schedule? That's everything. Second, what will the terms be on all that new financing they have to raise? The interest rates on that debt could be critical. And finally, can they actually turn all this revenue into real sustainable profit?
Which brings us right back to our final question. Is this Microsoft contract the ultimate validation, the thing that will launch IREN into the big leagues for good? Or is it a massive all-or-nothing gamble that could crush the company under the sheer weight of its own ambition? Right now, nobody knows for sure,